Ooh, getting ready to get started. Woohoo! What the hell am I doing? That's not what I wanted to do. Hmm. 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 Swipe left to close. Swipe left. Swipe left. Swipe left to close. Do this right here. Come on. And do that right there. And do this right there. And then do this right. Do this right there. Mike Sinclair! Welcome back. You missed me. I doubt you guys missed me. Jim Bibby, how are you? I'm going to start from the beginning. Hold on a minute. Before we go much further, give me a dime so I can phone my mother. Ooh, hold on a second. Here we go, here we go, here we go, here we go. Almost ready, almost ready, almost ready. And we are ready. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for a safe, predictable, consistent 1% per week. Now, I trade dividend stocks, specifically those that have consistently increased their dividends to their shareholders. Why? Well, the dividend is a portion, small portion, of the profits the company makes every single year, and then they hand them out to their investors. That's us. When we buy the stocks, we become the investors, we become part owners. You buy one share, you are a part owner. You are entitled to a portion of the profits. Now, there are two different types of companies. One, they take all their profits, put it back into the company, and you get nothing. Actually, you get capital growth. It increases the price of the stock, the company increases, blah, 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 but you don't get to see that until you sell your stocks. Okay, that's great. That's fine. Dandy. That's not what I'm looking for. I'm not looking to put my money into a company and sit and wait and wait and wait. No, 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 no. I'm retired. That means I need cash flow. Cash flow, well, on a weekly basis, not monthly, not quarterly, every single week. The only way I can do that is with weekly stock options. Now, I do trade one of the safest trading strategies there is. That is called the covered call, where I actually buy the stock, sell it to somebody else for basically the exact same price I just paid for it. So if I buy it for $100, I'm going to sell it to someone else for $100. So you might be asking, well, what do I get out of that? Well, I get to collect the premium. What's the risk? Well, the risk is after I buy it, there is a chance it could drop to the floor. But I have some rules. We're going to go over those in a little bit, and that will help cover that scenario. But here's the thing. If I buy on a Monday, hey, today's Monday. We actually bought some today. Is today Monday or Tuesday? Hold on a second. I actually have to look. Isn't that terrible? I actually have to look. It is. It is Monday today. Okay, so today, that's what happens when you retire. When you retire, you're like, okay, what day is it? Anyway, I buy, yeah, I get that. You know, it is Monday. I buy on a Monday and then I sell somebody the rights, not the obligation. It's just the rights for them to buy it from me for the exact same price I just paid for it. I get to collect what is called the premium. Now, I do this with what also is called a covered call. I buy the stock, I sell a stock option to somebody else to buy it from me at the exact same price I paid for it, or pretty much close to it. If I buy it for $10.99, I'm going to sell it to someone for $11. Okay, so the difference, you know what I mean. Anyway, so the premium, we are going to do a couple of trades so you actually see exactly what I do, so that way it may make sense, it may not. If it doesn't make sense, please feel free to ask questions. Now, I ask you nicely at the beginning, only ask the question once. You will notice that a whole bunch of questions are being asked. I will get to every single one before the night's over. Okay? I'm here from usually at 9, every once in a while, I'm a little late, but I go all the way until 11:30, and then I just answer every single question there is. I'm going to answer the questions as we progress, but please only ask the question once, and then do me another favor. Favor number 2, are you ready? Favor number 2, dividend stocks only. Make sure the company you ask information about has dividends. And better than that, make sure they have weekly options. If you don't know what a weekly option is, we'll get to that also. So let's get started and let's get moving. It is the 23rd of December, and you might be asking yourself, is this bozo going to be doing this on Christmas Eve? Well, damn straight I am. Bitcoin. Yeah, I don't do Bitcoin. Okay. Number one, no cryptocurrency, no futures, no quick contracts. What are they? Smart contracts? No. No futures. Dividend investing for dividend investing for weekly cash flow only. Now, there's hundreds of strategies for investing. There are literally bunches and bunches and bunches. And you can, but don't lie, don't die on me. I will. I got what you call post-nasal drip syndrome. It's just constantly dripping drip. So it makes me cough all the time. So ginger tea and honey helps alleviate that problem. So let's get going. We're going to get started with some dividend stocks. So let's keep on keeping on. First on our list, who wants to be first? Let's say hi to a few people. Chill with Chin, how you doing? And Fam Bam, cool. Neil Antonio, Steven Steinberg, how you doing? I think I know where I was going astray. I was doing the calls at the closest strike price above my cost and avoiding selling at a loss. That's exactly what you're supposed to be doing. You're supposed to be buying the stock. For example, here's Kohl's. Kohl's is currently at $14.30. The closest strike price, you get two of them. One is the 14 and one is the 14.50. Now, when I say everything has got to line up, we're not talking astrology, is the moon in retrograde, is Pluto coming into the, no, nothing like that. I like to look at the numbers. The numbers here, we're looking at our call option numbers. How much can I sell it for? How much can I buy it for? Stuff like that. Then I want to take a look at the chart, because the chart is going to tell me what direction it is currently moving. Never, ever, ever do you want to fight the trend. That's kind of like swimming against the current. You can do it, it just doesn't make sense. It's so much easier to go with the flow. And if the flow is currently to the downside, well, no. But here, if you take a close look, it's to the downside, but look what's happening right here. Okay, you found the bottom, now it's going to turn around. Stocks will go up, stocks will come down. As they go up, you're going to get to a certain point where you have people like me and some of you in the audience will say, hey, there's a lot of profit there. Let me start taking. Profit taking, the stock drops. Okay? And then it gets to a certain point where it gets so low where people saying, wait a second, this thing is too damn low. Let me start buying. And then the stocks go back up. They go up, they go down, they go up, they go down. So what do? I'm looking at good quality companies. That's all I want to do is good quality companies, companies I've heard of, companies I grew up with. I understand what they do. I know who they are. Okay? So, Steven, basically, we're going to buy a good company, right? And if I'm buying the 14.30, I'll probably look at the 14.50. This is working for this week because it's only going 7 to 12 cents per share, not quite 1%. But here's the thing. If it hits my target, great. See you later, and then move on. However, if the stock goes down, you might have to drop your strike price, but still have cash flow coming in. All right, let's keep on going. Billy D, Flocka, what's happening? Scott Hackler, Honey Badger, Larry Brown, what's happening? Sunnyside Comedy, how are you today? Michael Hamilton, how are you? Nate Dog, is that right? That Nate Dog? Oh, where'd they go? Okay, anytime I touch this screen, all the things disappear. Ken Banks, how you doing? Where was I? Uh-oh, I gotta go all the way back almost to the beginning. Bluefish, I saw you in there. Dr. Lies, all right, here we go, right here. Gandalope? Lapeg. Okay, Sandy. How you doing, Sandy? James Doherty. How are you? Dr. Lies. Ooh. Luis Fargo. Galaxy. If I buy 50 stocks of Tesla, can I change the logo? Sure. Why not? We'll bring it up on a company meeting. Focus for Good. Cool beans. Lagoon Starks. Tactica de Tra. Okay. Becca Macaw. Sorry, Becca. Austin Kraus, how are you? Nice to talk to you today. Pilot 1331. I'm kind of curious, Ed. The funny thing is, I never knew your name. Ed, is that erectile dysfunction or is that just Ed? Ed for Edward. The funny thing is, we're talking a nice conversation, and I didn't even know your name because you don't have a name on your TikTok account. And when you introduce yourself, you didn't say, "Hey, this is Ed." Anyway, old dog, what's happening? Michael Taylor, how you doing? Russman, user Summer T. Ron Detty, how you doing? Jerry Rundell, back again. David Crom, how are you? Estelle, how are you today? DGAGEY. Okay. Galaxy, dude, I have no idea what you're talking about. Okay. Are those all different stocks you're looking at, or are you just, all right. You got to stop doing that, dude. Really. It gets distracting. Linda, how are you? All right. Esther, shared the live. Thank you, Esther. Share, like, comment, all that stuff. You guys know what to do. All right. Biggerfoot. Randy, how are you? AV, Frankenstein, back again. Bluefish, back again. Trickster, back again. Javier, Eric, Anthony Ward, Captain Jack, Austin, what's happening? Jeff, Charles Wallace, Jonathan, HRI. All right, Galaxy, chill, okay. Jokin, how are you? Dave, Corn Pop, Adam, okay, Dan, okay, I'm saying hi to all you guys. Holy cow, there's a whole bunch of them. All right, Galaxy, stop it or I'm gonna have to block you, seriously. Roselle, how are you? In the meantime, I'm good, okay. I know you're good, just chill, relax, all right? All right. Alrighty, there you go. How do I feel about AVGO? We'll take a look at that next. AVGO. AVGO. All right. I'm going to get to everyone else. Give me a minute or two. No way. Biggest aquarium. I got a big aquarium. It's like 8 foot by 6 foot. We'll be setting it up hopefully sometime in January, February. Raj, how are you doing? In the meantime, Nick Bully. I don't know why I have to do it. It's kind of like childish. People keep putting stuff up online, just total nonsense. All right, Lion, we're going to take a look at AVGO in a little bit. Let me finish saying hi to everybody. Old dog, what's happening? Sports World Cup. Ooh, Bija. What's that? Bijan? Alex? Luigi, Albert, Paul, Apple user, Big Tex, Coke, what's that? Cokie Bell? Called trolling, yeah, don't do that. Dave, Ren, Adam, Travel, Bill, Adam, Brent, Willie, Terry, Larry Brown, AGNC. We'll take a look at that next. Uh-oh. Sensei Mike. Sensei Mike. Ooh, cool. Mike, hold on a minute. We will take a look at SCHD. You're new here. You know how I can tell you're new here? I'm very good at names, number one. Number two, if you've been here for a while, you know you wouldn't recommend SCHD for me to take a look at. For those who've been here for a while, you know how I feel about SCHD. But we'll get to that in a minute. Larry, same thing with you. Larry, you got to be new. Seriously. Oh, we're going to take a look at that one also. But let's take a look at AVGO first. Currently, AVGO is at 3. All right. Hold on a minute. I'll get it. I will. 234.74. Okay, there is no 234, but there is a 235, and the 235 is going for 271. That's well over 1%. Excellent. Well, let's take a look at the chart because the numbers work. Okay, so what am I buying it for? Right there, 234. What am I selling? The 235. Is it more than 1%? Yes, it is. That's what I'm looking for. A safe, predictable, consistent 1% per week using nothing more than pre-qualified dividend stocks. And yes, AVGO is on the list. So let's take a gander. Now, We're actually going to do a couple of sample trades throughout the night so you see how I do it. It's really not difficult at all. And the thing is, with TikTok, in order to be here, you got to be at least 18 or older. And the strategy I'm about to show you was created for my 9-year-old daughter back in 2008. Okay, now I've been trading for 20 years. The first 5 were not that glamorous. I made a lot, I lost a lot, kind of evened itself out. But it wasn't until my 9-year-old said, Daddy, can you teach me what you're doing? Well, kind of strange, but alrighty. So here's the challenge. 9 years old, okay? So it had to be simple, it had to be safe, predictable, consistent, and no way for her to lose. Because we all know what's going to happen if she starts losing money. She's going to cry. Dad's going to feel like shit. Mama's going to get involved. I'm going to be sleeping on the couch, even though the couch is kind of comfortable and quiet. It's just not a good thing. Simple, safe, predictable, consistent, and no way for her to lose. Okay, in order to do that, I came up with 5 rules. Number 1, never buy something you don't understand. Well, for her, it was never buy something that's not on our list. Okay? Because her to understand it was just asking too much. So I say on our list. Okay. We had a list of dividend stocks on a calendar. If it wasn't on the calendar, it was a no. Okay? Every single one of these dots represents a company that's getting ready to pay out a dividend. The dividend is what we're looking for. The dividend tells me when to buy. K8 is a loser. What stocks you have and how many of them? Well, we're going to get there. You're new here, so just sit, chill, relax, grab some popcorn, chill out, and just see if it makes sense. That's the first question. Always ask yourself, does it make sense? Great. So, 5 rules. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options are a must, and then the numbers have to work. We're going to get into each segment as we progress, but let's just keep on moving. We're looking at AVGO at the moment. First thing I always want to see is the chart, the 1-year chart. Where is the high of the year? Where is the low of the year? Where was it a year ago? Where is it now? And what direction is it currently moving? Kate, you want to take a look at Macy's. We're going to take a look at Macy's. I like Macy's. I wrote it down. We'll take a look at it in a minute. Let me... Can I see that? No, that's a little too far. A little too far. Right there. Whoops, right there. There we go. All right. A year ago, we're down here. We are down at 112.50. That was a year ago. Okay, the bottom of the year, the low of the year, was 102.14, and that was at the beginning of January. The high of the year was just recently, last week, 251. So she goes from 100 to 251. That's a 150% increase in 1 year. Well, it's cool. How often does that happen? It doesn't happen all the time. I like simplicity, safety, predictability. Let's keep on going. The last 90 days. Here's the last 90 days. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement over the last 90 days. It basically just stuck in this channel right here. Okay, a little up, down, up, down, up, down, kind of movement. And then just recently, 2 weeks ago, not last week, but 2 weeks ago, this thing makes a big gap up. And it kept on going, and then it gapped up again to finally hit the high. What do you think is going to happen at the high? Well, we all know what happens at a high. It ain't a profit until you take it. And look what happened. It goes a 158, shoots up to 2. That right? 158 30 days ago? Not even 30 days ago. 1, 2, 3, 4. 4 weeks ago, it was at 158. And she jumps up and he hits that. That's a big jump. 252. So it goes 158 to 252 in less than 30 days. A question. Bro, this is Elon Musk or Jeff Bezos stuff. Okay, just chill. All right. So from 158 to 252, that's about almost $100 increase. So what do you think is going to happen? Seriously, ask yourself a question. 30 days ago, okay, last week, $100 increase. Are you going to take profits? I know I am. Take profits, things going to drop. So it dropped a little bit 3 days. Now it's going back up again. All right, fine. Let's take a look. What does it normally do this time of year? Normally, now to find out what it normally does year after year, I take a look at what's called the seasonality chart. If you don't know what a seasonality chart is, let me briefly explain it to you. Michael, can you talk about Google? No, Google has just started paying dividends, okay? I mean, just started paying dividends. Okay, I only like companies that have paid dividends for at least 20 years. Why is... Okay. This is called a seasonality chart. All the way to the left is January 1st. All the way to the right is December 31st. It actually takes a look at 1 year of data. Now, the blue line represents this year. That's the movement for the stock this year. This red line down here represents 10 years of movement. Okay? 10 years of average movements. What does it normally do? Well, look at the beginning of the year. The beginning of the year is here. The end of the year, a nice, slow, steady uptrend all year long. Broadcom, you buy it in January, sell it in December, you make a profit. That's basically what that's telling you. But that's 10 years worth of data. That's what it does normally. So why do we use that? Because I want to see how does it normally react winter, spring, summer, fall. Is there any time of year where it jumps up or drops down? Well, apparently not this one. This one's just... nice, steady uptrend. All right, seasonality, nothing interesting to be, nothing to see here, folks. Don't pay attention to the man behind the curtain. All right, so I said I like the numbers. Everything works. If I buy it tomorrow morning at 234.80, I can sell the 235s, pick up 271. That is over 1%. So actually, let's take a look and see what that trade actually looks like. Okay, let's do a trade, and we're going to actually do a covered call. All right, let's get rid of this, and we're going to do it at 235. The 235 is right there. Okay, it's the price, the purchase price. Here's the strike price. I'm going to get it at 235, and let's see what one contract is going to look like. Okay, market order, so it opens up first thing in the morning, and here we go. This is what it sounds like. And I always tell everybody, read it out loud, because if you don't read it out loud, you could hit the wrong button and end up selling rather than buying, or buying rather than selling. So I always tell people, read it out loud, make sure it sounds right. Buy one covered call of AVGO 100s. That is the weekly, okay? 27 December 24, that is this Friday. That means the option is going to expire and become worthless at 3:59 p.m. on Friday afternoon. The 235 call option against the AVGO stock at the market to open. Well, my break even is 231.81. Well, what does that mean? 231.81 is break even. So anything over 231.81 is going to be a profit. Well, the stock is currently at 234.80, and I'm selling it to someone at 235. So what's my profit? Well, my profit, as it says right here, $318.50 per contract. One contract is $318.50. Two contracts is, what is that, $636.37, something like that. Okay. Now, just below that, you'll have the cost of the trade, including commissions. So let's actually bring up the calculator and do a quick little math and see what it looks like. If my profit is 318, okay, I want to divide it by how much it's going to cost me to do this trade. 23,182, 23,182. It gives me a grand total of 1.37. So I'm looking for a 1% trade. Well, this is 1.3. 1.3 is not that bad. Think about it. Every single week, 1.3. So there's a couple questions you need to ask yourself. Question number one, does this make sense? That's number one. Does it make sense? It either does or it doesn't. Okay? If you're a little wishy-washy, sit, chill, listen a little bit more, and see if, ask a question. If you ask a question, I can give you an answer. If it's wishy-washy and you don't really understand it, well, ask. Matthew 24, Sermon on the Mount. Ask and you shall receive. Okay. So 1.37. That's what I'm looking for, 1% or more. Looking for a good quality stock, AVGO. I like the company. Why not? The numbers work. Great. Let's go on to the next one. Let's get out of here. Back to the beginning. In the beginning. All right, so that's how I do it. Basically, I'm looking for a good quality company. I'm going to buy it if the chart is telling me. Okay, get the high, the low. What direction is it going? It's going in the up direction. I like that idea. Michael Haas, are you concerned about the top this month or next month? I'm not quite sure what do you mean by the top. Okay, if you can explain that much better, I'd like it. Dom, how are you doing? So let's keep on moving. AVGO, I like it. Everything looked nice. Let me write it down. AVGO. All right. Next on the list, then a pullback. Wait a second. Wait. Mike Haas, what was that a question? Top of the markets. Well, we don't know where the top of the market is. We don't. We never do. Okay, markets go up, markets go down. Okay, what is the American public going to do? Are we going to stop spending money? Probably not. We are a bunch of consumers. That's why we were born and raised as consumers. That's what we do. Okay, Larry Brown wants to take a look at AGNC. AGNC. 945. Now, wait a minute a second. Doesn't AGNC not have dividends? Hold on a second. AGNC. Let's take a quick gander over on Yahoo Finance. You guys got to find a good couple of websites that you really like. I like Yahoo Finance. You might like Google Finance. Someplace that can get you the data that you need in order to make your decisions. All right, I'm going to look at historical data. Okay, all the dividends, and see how consistently does this company increase its dividends. Oh, it doesn't. So this is going to be a hell no. Double hell no. Holy shit. Sorry about the language, but here we go. Okay, Larry, are you paying attention? Larry, take a look. In 2008, June 30th, 2008 was the very first dividend they paid, and it was 31 cents a share. Okay. Second dividend, $1. Okay, it went up. Third dividend, $1.20. From there, it went from $1.20 to 85 cents. That was a big drop. Then it went to 150 to 140, and it was at 140. Let's count it. Okay, 2009, 2010, 2011. So 3 years, it didn't no increase. Okay, 2012, it moves up. Wait a minute, it went down. In 2011, it's at 140. 2012, they decreased it to 125. Larry, that's not a good thing. But wait. It gets worse. It does. So it goes from 140 to 125. Then, in 2013, it drops to 105. Now, when I say I want companies that are consistently profitable, if this company keeps decreasing its dividends, the only reason a company would decrease its dividends if the profits kept decreasing. So it went from 140 to 125 to 105 to 80 to 65. Okay, in 2013, we're at 65. Okay. But wait. It gets worse. It does. Hold on. So in 2014, we're at 65. Holy shit. 2014, it drops to 22. From 65 to 22. Dude, that is a 60% decrease. But wait, it gets worse. Okay, from 22, it drops to 20. And then, wait a second. 2015. Okay, we're going to count it. You ready? 2015, 20. 2016, 20. Holy shit. And then it drops into 18. Dude, this thing kept getting worse and worse and worse. Hold on. We're at 2016 at 18 cents a share. Okay? Oh, 2019, 16 cents a share. 2020, 12 cents. All right, I'm just going to say no. Okay, so from 2000 and okay, 2020 is at 12 cents. 21, 12 cents. 22, 12 cents. 23, 12 cents. 24, 12 cents. Yeah, 5 years in a row, no increases. Dude, no, Larry, sorry. AGNC keeps decreasing its dividend. Now, the only reason you decrease your dividend is because your profits decrease. So do you really want to put your money in a company that consistently loses money? Consistently. They started out at $1.40. Well, now they're down at 12 cents. No. Right, anyway, I missed a question over here on YouTube. What do we got? Then the pullback. Yep. Do you think do I think Alphabet will be increasing its dividends consistently? You know, to be 100% honest with you, I have no idea. Okay, Alphabet just started paying dividends. They have what, 1 year, maybe 2? Okay, I'm not going to be looking at Alphabet for at least 18 years, maybe 15 years. 15 years from now, I'll be looking at it. Hey, are they profitable? Are they consistently profitable? Yes, no, maybe. Who knows? All right, so Larry Brown, terribly sorry, dude. AGNC consistently losing money. It's just going to be a no. All right. Now, Sensei Mike 68, SCHD. How about SCHD? How about I just say no and we can leave it at that? Or do you really need me to explain? Because it's almost as bad as AGNC. Okay? Monthly optionable stocks means I can only do it once a month. Once a month just doesn't work for me. Okay? The numbers just don't work. And as simple as that. It just doesn't work. It just doesn't fit. Okay? Larry Brown. Oh, not again, Larry. Seriously. Oh, no. Okay? O is a monthly optionable stock, which means I can only do it once a month. When I say I want weekly cash flow, you cannot get weekly cash flow from a company that offers monthly options. It can only do it 12 times a year. So, no. The Dragon, how are you? Drizzle, what's happening? Shirley, Charger, Mike. Mike Morgan, how are you doing? Dom Riz, how you doing? BX, huh? BX. What the heck is BX? Blackstone. Ooh, Blackstone. Well, let's take a look. BX. How often has Blackstone increased its dividends? Well, let's take a look. Oh, I can tell you no right now. Seriously. Uh-oh. Flock Queen, I'm having trouble trying to manage a losing position. Oh my goodness. Flock, sorry about that. You know, Flock, you've been here for a while. I keep telling you, drop me your phone number. I'll give you a call. I'll walk you through some stuff. Okay? I mean, you're here constantly. You know what I sound like. So anyway, I'm not going to try to sell you anything. I'm just going to help you out with the situation that you're in. Okay, and you can't leave your number here on YouTube because I probably won't get it. You have to go over and DM me directly to my email. All right, so let's take a look at BX, Blackstone. They started out in 2008 with 30 cents. And then they dropped to 10. Then they go to 32, drop to 20, to 10, to 22, to 10, to 42, to 30, to 23, to 58, to 35, to 55, to 44, 78, 89, 74, 49, 61, 28. Do you see a pattern here? Seriously, Mike, do you see a pattern? No consistency whatsoever. Now, I never tell people how or where to invest their money. I just show them the numbers, and the numbers, basically, these aren't my numbers. I'm not coming up with these. These are statistical data that you can go to any financial website and find for yourself. Okay, so Mike, if you take a look and you see it goes from 35 to 55 to 44, 78, 89, 74, 49, 61, 28, there's no consistency whatsoever. Losing trade. Yeah, I get that. The 10-minute loser. That's funny. All right. So, Mike, I'm going to say no to BX. Sorry. Sensei Mike, how are you today? Debo, what platform do you use? Okay, Debo, this is Think or Swim, not Sink, S-I-N-K. It's Think, T-H-I-N-K, Think or Swim. And it's owned by Charles Schwab. Okay, now Charles Schwab bought it from TD Ameritrade, who bought it from the original programmer. Now, I've been using this trading platform for about 20 years. Okay, about 15 years ago, I wrote a book on choosing a trading platform. That was 15 years ago. Most of those probably don't even exist anymore. Drizzle. I purchased my first stock today and bought 200 shares of MVST. We will see. MVST. What the heck is that? MVST. Microvast Holdings. Okay, so Drizzle, I'm going to ask you a question. Why? Why would you buy this thing? Seriously, it's a serious question. Okay? Last month it was at 20 cents. Last year it was at $1.60. It drops down to 20 cents. It shoots up to $2. And you're trying to do monthly options with it? Well, let's see what the next option is. Okay, so that's freaking crazy. It is, seriously. Look at the numbers. They're just nuts. But it's a monthly option. So that means you can only do it once a month. Okay, so hypothetically speaking, if you bought it at $2, you can sell the 2 for 30 cents a share. That's like a 15%. That's crazy. But it moves like this from 20 cents up to $2. Yeah, I don't know why you do that one. But anyway, I don't tell people what to do. I just look at the numbers. Me, no way. Okay, I can almost guarantee this does not have 20 years of increased profits. But that's just me. Okay, Flock Queen, Kohl's as an example. I bought it $15.30. Hold on, let me pull it up. I like Kohl's. I actually have some. You guys are probably thinking to yourself, why the hell would you have Kohl's? It's sinking. Buying it at the bottom, okay, you can only go as low as the bottom. Okay, you can't get any lower. You can't get any cheaper because you're going to make most of your money buying low and selling high. So the low of the year is as low it's going to go because it gets to a certain point, turns around, goes back up. That's what I'm looking for. Okay. All right. You bought it at $15.30. Let's zoom on in, see what we're looking at. Okay, you bought it at $15.30 and it's hovering around 14. What strike price should I be buying? I bought the 14s last week and had to roll. Okay, see, Flock Queen, when I tell people most of the time you're going to lose money by pressing the wrong button or doing the wrong trade. I don't buy options. I don't. I sell options, and here's the reason why. 80% of all options expire worthless, and that's what I'm looking for. I want to be on the 80% team. I don't want to be on the 20% team. Okay, I don't buy anything. Okay, so if I buy the stock at $15.30, which is up here, okay, the 15s are going for 2 or 3 cents. Not really worth it. The further out you go, the better rate of return you're going to get. Further out, you push it out further. Currently, it's at $14.30. The 14s going for 27. The 14.50s. All the numbers are there. Okay, but you're right. Rolling it forward week after week after week, it has something coming in. Okay, number one, make sure you like the company. If you don't like the company, don't buy it. Well, I like Kohl's. I know who they are. I know what they do. And every single week, I'm into it at 17. Okay, so you're into it at 15.30, right? About here. I'm into it at, okay, right here, 17.15. This is where I got in. All right? Now, but this week, I sold the 14.50s. Okay? Bachi! I'm in the middle of a live. What's up?
I am sorry for interrupting. I just got here.
Got where?
Your house, St. Pete.
Oh, cool beans. Come on in. I'll see you when you get here. Either come in the back or come in the front.
I'm walking up to the front right now.
I'll go unlock the door for you. Hold on a second. All right, you guys, hold on a second. My son just got here. I'll be right back. My son just got here, so I'm going to cut this short. But let's keep going through what we're doing. And I will be jumping on a little bit later after I'm done with my little visit. So let's see what we got. So anyway, Flock, you jumped in at 15. I'm in at 17. I sold the 14.50s because I look at it twice a day. I got a good feel of what it's doing. Where's it going to move? Okay, so I want the consistent cash flow. So yeah, I will probably end up rolling it forward to avoid losing. And I don't like losing. Seriously, I don't. I'll keep rolling forward. Okay, so Drizzle. Seriously, dude, I have no idea why you'd buy that thing. Okay, Larry, we already talked about O. GNP, trying to make it logistical system out of something that's completely subjective and random. Okay, that's not a question. That's a statement. Mike Morgan, how are you today? What about private equity companies? Mike, you got to come up with a better question. Okay, ask me a good question, give me an idea, okay, and then we'll go from there. Okay, I don't know what about private equity companies. Flock Queen, gotcha. So maybe I'm doing the right move by rolling. I've got the 14.50s this week. Wow, cool. I got the 14.50s also. Okay, now I'm kind of hoping that it'll expire worthless, so next week I might be able to do the 15s or the 15.50s. But I have no intention on selling. Okay, I intend to keep rolling it forward, keep that cash flow rolling in. Frank Geller, how are you? Ash and Pash. Ash the Pash. All right, hold on a second. I'm missing some. Missing some. Canostock GOEV. What the heck is GOVE? GOVE. That right? GOEV. All right, GOEV. EV. Canoe Incorporated. Oh, come on, dude. 8 cents a share. What makes you think a company that's 8 cents a share is going to have 20 years of increased dividends? AGNC or O, good monthly. Okay, Larry, I understand that. I'm looking for weekly, not monthly. By the way, Riot premiums are still looking good. You're absolutely right. They are. Steve Tucker, enjoy the time with your son. Catch you later. Merry Christmas, y'all, from the South, as in North Carolina. Dude, I'm in Florida. That ain't South, that's North. All right, let's keep on going. Hollywood is in the house. So anyway, Larry Brown, you're absolutely right. O and AGNC are good monthly stocks. But they are monthly, okay? Not what I'm looking for. I'm looking for a safe, predictable, consistent, weekly cash flow, not monthly. So, it's great. I'm glad you actually enjoying, whatever you're doing on the monthlies with the AGNC and the O. Nothing wrong with that. Just not what I'm looking for. Savagala, Steve, Inspire. What's happening? Cool. Yo, shout, down. David G, good evening to you. Sean Gwynn, EC, what's happening? Crypto Ghost for you, cool. RR, how are you? Lorenzo, what's happening? Dylan, Cool beans. Dylan, you made $2,000 on a call option on Spider with a $500 investment. Awesome. It happens. You know, they have a saying, Dylan, the sun shines on a dog's ass every once in a while. What does that mean? You know, can you do that every single week? Is it consistently profitable? Is it safe? Is it predictable? Is it consistent? I don't like the spiders because the numbers just don't work. Okay, Becca Makawa, how do you get the seasonality chart? Simple. You come up to the chart right here, just above it. You see these lines right here? You got the double candlesticks right there. Click onto the double candlesticks. There you go. Slide on down where it says chart mode. A window will open up. Seasonality is right there at the bottom. Okay? Let's keep on keeping on. All right. Costco travels. Costco is really out of my price range, believe it or not, C-O-S-T. Yeah, $950 a stock. I don't do that. Sorry. User 5256, AISP. Why does that tell me that's an AI stock? And that's going to be a no. Airship Holdings. Monthly. Okay, we talked about this. Monthlies just don't work. Just don't work. What's the strike price mean? Oh, newbie. All right, how much to get started in dividend investing? Another Christ follower. Oh, cool. How much? Well, my grandson started out with 50 bucks. Okay, he's 4 years old. Now he does what's called dividend capturing, where he captures the dividend because he doesn't have enough money to buy 100 shares of anything. Okay? Hold on a second. So you can start with anything, but usually you're going to be doing something like dividend capturing, where you just capture the dividend or the run up into it. That's a whole different website that we're going to be working on in the new year for people who don't have a lot of money. Now, what's the strike price mean? All right. Let me go to one that makes more sense, not this gibberish. Okay. There's a couple of things you need to, what did it cost? What did what cost? Usually I have no idea what you're talking about, but let's keep going. Somebody wants to know what is strike price. The current stock price, okay, the stock price is, see this little stuff right here? It goes up, it goes down, it goes up, it goes down, it goes up, it goes down, blah, 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 blah. Okay. Now, if I'm buying it currently at this moment in time, the current stock price for Macy's is $16.59. Now, when you get into stock options, it's kind of like an insurance policy. You can buy it, you can sell it, but it has to be a certain price by a certain date. Now, when I say I want weeklies, look here for a second. 27 December, that's this Friday. 3 January, that's next Friday. 10 January, that's 3 Fridays away. 17 January, 4 Fridays away. 24 January, 5 Fridays, so on and so forth. Good. Well, you need a price and a date. The date, weeklies, right there. The price, it can be $14.50. 15, $15.50, 16, $16.50, 17, $17.50, so on and so forth. Okay, the strike price is what I'm selling it to someone else at. So if I'm buying the stock, because you gotta remember, you have the stock, you have the options. Two separate entities. Think of it this way. The stocks are traded in New York, the options are traded in Chicago. All right, so if I'm buying it at $16.59, the closest strike price is the $16.50. So if I buy it at $16.59, I can sell it to someone at $16.50, and then I would collect 29 cents a share. That is more than 1%. Okay? So let's keep on going. I want to answer the questions, and I'm going to go hang out with my son for a while, and then after that, I will jump back on and do it again. Because when I was in Vegas yesterday and the day before, I found there's a whole new group of people that are on from 9 o'clock Pacific time until 2 in the morning. Anyway, so I'm going to do that. Okay, user, what price the stock has to hit in order for me to make a profit? Ooh, good question. Let's check this out. So if I go here, if I go to covered stock, get rid of this, Okay, currently at this moment in time, like I just said, the current stock price is $16.59. The closest strike price is going to be the $16.50 right there. So if I buy this one, okay, and I do get just one contract, let's go bang, 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 all the way down to one, right there, there's one. I want to do it the market order. Now the reason why I want market order as opposed to a limit order when I'm entering, because the stock and the option are tied together. I know what my profit's going to be right up front. Okay? Now, I want to hit confirm and send, and that's going to give me the details. It's also going to give me the answer to your question, right? Buy one covered call Macy's 100, that's the weeklies, 27 December 24th, that is this coming Friday. The $16.50 call option against the stock to open. All right, so the break even, 16.2750. That means anything over 16.50. Wait a minute. 16.27 is going to be a profit on this particular trade. Each trade is different. Okay, the maximum profit here, 22.50. How much is it going to cost me to do the trade? 1,628. Let's bring up the calculator real quick, and then I'm going to go hang out with my son for a little bit, and then we'll pick this up after. 22.50 is the profit divided by what is it going to cost me? It's going to cost me $1,628, and that gives me a grand total of 1.38%. Now remember, I'm just looking for 1%. If I can do 1.38, well, that's even better. All right. So hopefully that answered your question. James, what do you know what meme coins are? I have no desire to know. Okay? Okay, think of it this way. I grew up in a time in the 60s, 70s, and 80s. We had certain sayings. Okay? 1, if it ain't broke, don't fix it. 2, you want to cry, I'll give you a reason to cry. That's always a good one. 3, if it works, don't mess with it. Flock Queen. So on the first week of owning the stock, you can pick up a closer strike price. The stock drops. Stock price the second week, and thereafter it's more conservative in the strike price. Yes, exactly. We're still learning. Okay, Larry, I'll be back in a little bit. Cash flow, blah, 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 blah. Okay, you guys, what indicators do I use? The only indicators I use are you ready? Jacob, you ready for this? Are they consistently profitable? That's 1. Do they have weekly options? That's 2. Okay? What's the contract size you go into per trade? It always depends on the money. If I have $100,000, it's 20,000, 20,000, 20,000, 20,000. Okay, Troy, you don't understand? Why ask why? Hi, James, Alcoa. You guys, I'm going to catch you guys later. I'm going to go hang out with my son, and we can pick this up again tomorrow or later on tonight. I will be jumping on again later on tonight, so you guys have a great time, and we will see you again later. And stop right there. Stop right there.